Welcome, everyone, to this week's edition of the Commercial Real Estate 101 podcast, coming to you live from our new office podcast studio. My business partner and I set it up the last few weeks, and I've just been working on getting it all set up. We've got all the cameras and everything else set up, and we're really excited to kind of bring a new look to the podcast. But today, I have a phenomenal guest, Christy Candle, a friend of mine, and also someone that we recently started a podcast with called The Local Real Estate Developer Podcast, to inform the broader masses about real estate development and kind of hopefully inspire other people who are interested in getting into real estate development to take on their first project. Christy's been in the space for a long period of time, a really, truly a phenomenal expert, and we're just really honored to have you on the show, my friend. So how you been, Christy?
Hey, good. Thanks for having me. I just had some friends and family in town, so that was a nice little mini vacation. So
that's great.
Well rested and ready to go.
So are you now back in Nevada?
No, I'm in Southwest Florida.
Southwest Florida. Okay.
In theory, I'm a reverse snowbird. So May through December, I'm in Florida, and then January through April in Tahoe snowboarding. Okay. But in theory.
Awesome. Well, that's good. I mean, and obviously having the flexibility to be able to do that is something that you've been able to do just because of the fact you've been in the business and you have been able to take on different projects. And I'm hopeful that in this podcast, we can highlight kind of your story and the way that you've been able to build a life for yourself as a real estate developer. So I'm interested in kind of starting out the conversation by maybe sharing with the audience, how did you get started in real estate in general?
Accidentally fell into it. Like a lot of people that we've been interviewing, it doesn't seem like there's a, hey, I'm going to be a developer when I grow up path for most people. After college, so I grew up in Ohio, and after college, I moved to Florida, and I had started working with a sign company, and they were putting up the signs for CVS Pharmacy. And at the time, that was 2007, 2008, and we were building CVSs on every corner. So I got to know the different developers working with CVS. And one day I just asked him, and I asked one of them, and I said, hey, Eric, what's it take to be a developer? And he said something that sounded amazing to me. He said, well, Christy, for us, we're a smaller company, so we'll teach you the business. We just need the right people to join our team. I was like, great, sign me up. So 3 weeks later, I got the opportunity to start working with them. And we were at the time working in Southeast region, so Florida, Alabama, Georgia. And a couple of weeks into starting working with that company, I got a call from 2 of our guys out in California, and they said, hey, Family Dollar would like us to open an office and develop locations for them in California. Can you help us do research? I'm like, sign me up, because while I didn't know what California would bring, I just knew anytime you open a new market, there's so many more opportunities and things that can come up. So I ended up then in 2009, I joined them. 2010, I became the person who opened their office in Orange County, California. So and we ended up doing 30 deals a year. So from the time the real estate managers would get the dirt under contract, I came in, did the due diligence with the city, found and vetted the architects, engineers, design team, went to the city councils and planning commissions for entitlements, did the permitting, and even did construction management. So it was a whirlwind of experience that got me into development. And really, I remember vividly one day, my friend Vasanti told me, she's like, Christy, you've gotten a 30-year career worth of experience in the past 4 years. I was like, ooh, okay. So that kind of turned the entrepreneurial part and moved things along in my career. So then I had worked with a developer in Newport Beach. We did, instead of single tenant developments, we were doing shopping centers, industrial, residential. And that immediately made me realize development is development. If you know the right questions to ask in the process, you can define what each project will take. So 2015, I started my own development and consulting company and never looked back.
Yeah, that's an amazing story. And it's cool to see the breadth of experience that you have in the space. You started off in the single tenant space, and then you got into with a developer that operated in a variety of different property types. And you realized through that experience that although the product may be different and the processes may be, there may be some slight variations in the process, that the meat and potatoes of how buildings are erected tend to be somewhat similar. And so you're able to take that knowledge and now you apply it to, advising people all across the country about different commercial real estate projects that they want to take on. And ultimately you've done projects yourself, which is pretty awesome. I mean, that's a lot of reason why people get into this space, is to obviously build something that they could look at and be proud of, and also the the ability to be able to build something for their families and generate income that they could live off of. So that's always very inspirational. Now, you mentioned your experience in the space on the side of you working for another firm. What was your first jump into the entrepreneurial space like for you deciding to take on a project on your own? And was that while you were working for the previous firm, or was that after you had jumped ship in 2015?
So I had fairly soon after starting working with the second developer, I realized, wait, this is it. And so I started building the company and the operations part in the background of how would this look, setting up entities, insurance, and things like that. And I realized, because development projects, we've talked about this a lot with guests, but development projects take a lot of time until you get income. So I said, well, why don't I do a consulting arm as well? So that way we can help other developers and be their outsourced development project manager in the meantime, while waiting for our own projects to finish. So I did not actually have people lined up. I just knew, I was like, I need to get rid of these golden handcuffs because I was paid very well. And I was like, I have to get rid of these golden handcuffs and take the leap myself. And just see if it works. Worst case, it's a 1-year sabbatical. Best case, it turns into many other businesses and revenue streams and creates the life that I've always wanted. So once I started the company, because I had made a name for myself and had built so many relationships, I was very quickly able to step in and start working with developers on their projects, and was able to, from the beginning, structure it in a way to where they had the option of either paying a fee for having me on, or equity, or giving me equity in the project. So I was able to kind of dip my toe in a lower risk way of saying, hey, I know how to do the development process soup to nuts. Here's what my fee would be if you just paid this. But if you want to defer the costs, then we can take some equity in the back end of the deal. So that way it was lower risk for them and gave me a chance to have some upside in a project instead of just project-based bonuses. So it was a combination of both from that angle. And then that led into, so not only working with a bunch of private developers, but then turned into a partnership 6 months into the company, essentially joint venturing with one of our hydrogen clients to build out their whole development team, to where we ran the whole development side of it. And they were able to secure the venture capital and the grants and do the operations of the locations, which was a very awesome and rewarding 10-year run of getting a new technology up and running as well.
That's awesome. That's awesome. And you made a point, which I think is super important, that I wanted to kind of elaborate on as well, is that, you mentioned that early on in the process, before you even took on a project for yourself, where you bought a building and developed it from ground up yourself, you had the opportunity to connect with these private developers that were going to be taking on these projects. And instead of you saying, hey, I'll take my fee and I can use it for my own use, you kind of kicked in your fee as an option to gain some equity in a project that ultimately you had all the numbers in front of you. I'm assuming you probably knew how the project was going to start making money on the back end, and so you could see how the growth of that fee could grow in the future. And ultimately, you decided to participate in some of the upside of the project. And that obviously gave you incentive, too, to be able to deliver a great product, because at the end of the day, it's like, hey, the better product I deliver, the quicker I deliver it, and the better, it operates, then ultimately that means my upside is going to be there as well. And, obviously there's a lot of brokers and investors that listen to this podcast. And for the brokers in the audience, one of the best ways you can participate in some of the projects is if you're representing or working with developers and you have a commission. Often rolling some of that into the project can be a good way for you to get started, and you get some exposure maybe on the limited partner side. So you get to see how these mechanics work, so that in the future, if you decide you want to do something on your own, you have the potential to be able to do that as well. So I just thought I'd highlight that briefly, because it seems like that's kind of the route you decided to take, which is awesome. And it's much lower risk than you deciding to do it all on your own and kind of fighting through the fire, as they say. So
Yeah, and I think the key in development and seeing all the different developers and how they would structure their deals is that you don't have to figure it all out. You can come in as a partner in different scenarios. And I've had some friends who they bring in their architect as an equity partner to for their fee as well. So it's like you're able to get people to come in, and development takes a team effort. I mean, in California, we're 3, 4, 5 years out from bringing deals all the way through. So it's understanding that you don't have to have all of the aspects, but if you find the right team and partners, then you can really be successful at it.
yeah, that's some great advice. So you went through this process. You decided to start your company back in the mid 2010s, and you started operating in the consulting capacity, and also in tandem to that, working with your JV partner on the hydrogen facilities. During that period of time, were you strictly focused in on those and nothing else, or were you also acquiring real estate? And if you were acquiring real estate, how did that thought process, how did that first project come to fruition?
It was a combination of all of that. So I'm a serial business owner and operator. And so while building up and when we were doing hydrogen, we were probably doing 10 to 20 a year. So that took a bulk of the time in the team. Ended up building project management software for that and others. But also seeing that money come in going, hey, at any point in time, if something were to change in the economy with grants, with venture capital, and part of the funding for our deals goes away, what do I do with the income that I'm making? And so through that, did a combination of smaller real estate investments in Nevada, Ohio, and Florida, creating property management companies and taking some older buildings and then completely gutting and renovating them and making those as long-term rentals. So basically taking the money from the primary partnership and turning that into a bunch of lower risk diversified rentals to create the cash flow in that aspect too, and being able to bring in other partners and showing them those avenues. And those were housing projects.
They're housing, correct. So
Yeah.
Were they single family homes, multifamily, or a combination of a lot of different things?
Mostly multifamily, and taking, whether they were offline or just taking completely run down fourplexes and completely gutting and renovating and bringing them back to life and making them not slumlord rentals.
Yeah. No, I mean, I can understand that. There's plenty of, it's unfortunate sometimes I go to some of these real estate investor events, and I see some of the people that operate some of these properties, and I'm just like, man, like I would not want to live there. And I'm the type of person that if I own something, I want to make sure that I have pride in owning it. I want to make sure that I deliver a building or a property that everyone's going to want to be in. It's not something that I'm trying to eke out every single red cent that I can from the deal, because in the long run, I don't think it's good business. But
no, and I remember one property we found in Reno, and we walked it, and the way the owner talked so down to his tenants, and that was a complete slumlord one. It was disgusting and made your stomach turn. Like, no, that's not what we take pride in doing. Like everyone deserves a good, clean, bug-free, mold-free roof over their head, and people who treat them with respect. So that's one of the most rewarding parts of it is having your team and taking units that, and some of them we were able to leave the tenants in because they said, hey, you can remodel this while we're here. We don't have anywhere else to go. And we would just love if our bathrooms were redone, if our kitchen's redone. And so we have several tenants across the country that have that scenario, and they don't ever move out, and they're so grateful that when something's wrong, that our team comes in and takes care of it.
That's awesome. Yeah, and that's the right attitude to have in any business. I think you do everything. How you do one thing is how you do everything. So it's one of those ideas that if you're going to be in this space, I encourage anyone to really just put your full force into it, and obviously operate at a high standard like you are, Christy, which is awesome. So one of the things that and again, I myself am an aspiring developer. I personally have not taken on a development project. I know we've talked offline about one that we're looking at currently, which would be our first in the space. But I think one of the challenges that I hear a lot of people talk about, just as someone who is in the brokerage space, and I've worked with different types of developers, both inexperienced and experienced. I think one of the often things that I have to kind of talk to aspiring developers about are some of the risks associated with development. So if you could kind of talk about maybe some of the risks and rewards of what development it offers, I think that would be helpful. And we can kind of go from there.
Yeah, I think the biggest thing is that it will take a long time, but there is some amount of money that you need to spend ahead of time. So for people coming in, I would say if you can keep your W-2 and start to work on your first project, that way you have the cash flow, that would be ideal. And then also to know that you will need to spend a portion of money upfront, whether it's to do environmental, to do a survey, to do a geotech report, to maybe pay an architect to draw up some site plans and things to go through the city zoning. So just knowing that development is risky and there is a capital outlay to some extent that needs to be put out. So that's where if you can do the steps in the right order, you're mitigating your risk by not spending money up front when you could wait, further into the project to do that. So, and that comes with knowledge and experience and having, relying on your architects, your engineers, your team to say, do we need to do this now, or can we wait to do that? So knowing when to do each portion of the project. And then also knowing that development everyone has a different risk profile. I've worked with some developers who are completely, they will take a ton of risk. They'll buy the land before figuring out zoning, figuring out those aspects. And I have other developers that will wait until they have permits in hand to where the next day they can put a shovel in the ground before they close on the property. And what that means is you're not going to get every landowner to give you that length of time, 6, 12, 24 months to buy the property. So it's those portions of risk are there. And just talking to some friends the other day, your deals will back to the risk tolerance. Your deals will probably blow up 2 or 3 times along the way. And the plan that you started with is not the plan you end with, but it's how you problem solve and you get to figure it out. That while it will give you the wrinkles and gray hairs, it also gives you the best stories on the back end to go, oh yeah, remember when that happened and completely derailed the project, but then we were able to problem solve and put the puzzle pieces together and bring it all back. So that's being a good problem solver and not being risk averse are key traits to people who get into development, and having patience.
And the patience piece, of course. And to your point, like there is inherent risk in real estate investing, and probably even more so in development, because there's a lot of unknowns. If you're taking on an adaptive reuse project, you've got things behind the walls you may not even know what to contend with, especially if it's an older building. I hear horror stories of people who just tear down the walls and are like, oh my gosh, there's all these issues. So that's an inherent risk in just the process of you just starting in that space. But understanding, to your point, the team members required to make the project work, because no one knows everything. There's no way even if you've been in the business forever, there's going to be stuff that comes up that you have no idea about. And knowing how to source and engage with the right people to kind of fit the pieces together is a big part of that. And knowing that you're going to face challenges regardless of whatever you pursue as far as the project is concerned, but finding ways to navigate that is very important. So I appreciate that.
Well, when you were mentioning that when people just tear open walls, that just reminded me of several things that people will do. One is they will buy a property without checking zoning. Please don't do that. Please check your zoning. Please talk to your city and say, hey, I'm looking at buying this property. What's the zoning? Can I do this proposed use at this property? It's doesn't cost you any money. And it's the biggest thing that city planners and city managers will say. They're like, I really wish this person had come to me first and I could have told them, don't buy that building because we're not going to be able to allow you to use that. So checking the zoning first is very key. And when you do an adaptive reuse project, there are while it does cost money, taking an architect in or taking a contractor in and maybe opening up some of the walls and evaluating the electrical systems, the plumbing, the HVAC, and just seeing what do we think we have versus what does code today require? Because that's another big one is, oh, well, the building's here and it already has that stuff, the HVAC, plumbing, electrical, it's fine. We'll just use that. Well, depending on how much rehab you're doing, the city could say, well, that's not up to today's current code. And so you're going to need to completely rewire the building, change out the panels, do this. And that becomes very costly. But it's things that you can spend a little bit of money on up front to figure out, put a dollar amount to it and see, does the underwriting still work?
Yeah, no, 100%. And to your point, I think a lot of people just assume that if it's your property, you can do whatever you want to it. But in reality, there's a lot of nuance to it. I mean, I'm sure in your city that's the same way. Like if you modify the exterior of a property, that triggers an additional layer of approval for the city to say, okay, well, we have to reassess and evaluate how this is going to lay out. And sometimes, I know on our podcast, the Local Real Estate Developer Podcast, we interviewed someone who had made some exterior modifications to the property, and the city pretty much put a stop work order on their building, and they had to navigate that whole process because by them doing those modifications, it triggered the new code that they were like 3 inches off as far as how far they were or how close they were to the property next door. And ultimately, it had to comply with the new code, and it cost them a bunch of time and money. And that's the type of stuff that you don't really think about on the front end, but it can cost you a lot on the back end. So kind of crossing your T's and really engaging with professionals who understand that. And it's not a bad thing to go down to the city and just sit there for as long as you need to get all your questions answered. And if that means you come into the table and saying, hey, like, this is what I think I'm going to do. Who do I need to talk to kind of get an understanding of what the steps are and any challenges that I may face? I'm guaranteeing you, because I've done it before, the city people, if they don't know definitively how to help you, they'll point you in the right direction. And so you just need to be able to kind of humble yourself a little bit enough to say, okay, well, I don't know all the answers. I'm going to go figure out those answers because it's going to save you a lot of time. It's going to save you a lot of money. And ultimately, it will allow you to be able to hopefully complete your first project, which is ultimately the goal. So,
yeah. And even to this day, when I say I go in and do due diligence, we were looking at a 2-acre lot in Largo, Florida to build either townhomes or apartments. And we go into the city. We did it virtually, but there's a whole checklist of questions of, hey, let's put all our cards on the table right now. And let's see, here's exactly what we want to do. Is this allowed? What's the process to go through? And you ask all of the questions, because that is the point where you want to know what exactly can they approve? Will they approve? What's the best scenario? And then when you come back, you can craft your site plan, you can craft your buildings to meet what they wanted in their intent. And that doesn't cost you a dime. There's so many things that you can do, spending your time asking the right questions that can save you a lot of hassle in the long run and move your project along a lot faster as well.
Definitely. No, I couldn't agree more. So one of the things that I'm kind of interested about is, the process. So let's say that you are looking for an opportunity. What are some of the things that, and I know every developer is different. Some people focus in on affordable housing. Some people focus in on retail. Some people focus in on industrial. But as far as like the more general understanding of what an opportunity looks like, what are some of the things that you yourself look for when you try to assess whether or not a project's going to be viable?
I like to start with, and I'd like to say, stay local, stay in your own community and kind of see what places are missing that you want to live, work, and play. Also, development takes a long time. So we talk a lot about putting your vision together, whether it's for the community, the project, whatever it is, because you're going to hit obstacles and challenges that 6 months in, if you aren't really committed to this project and you're not passionate about it, you're going to want to give up. So for me, what we are focusing on currently, I live in Fort Myers Beach. It got annihilated by the hurricane. So we're looking at ways to leverage new technology, modular construction, and things to develop some of our infill lots to maybe not fully make them affordable, but to make them attainable housing. And we know there's a housing shortage across the country. So that's something that we're very passionate about, both locally here and just in general across the country with affordable housing and leveraging things like modular, which is, for us, it's about half the cost of new construction and about a third of the time, which time is just as important with money. But when you do evaluate the deal, you will go through 3, 4, 5, 6 different levels of underwriting, to where you're first going to do the back of the napkin and throw in your general plug to say, hey, if I can buy this land for this amount and I can get this type of debt, and maybe the exit strategy is to sell in the back end, and just kind of plug in some general numbers and go, okay, this works. Then you move to the next step of the process. And as you go each time, and we've got all sorts of checklists and things we use internally and with the local developers, that it's here's all the costs that you're going to encounter on a project. So that way, there's at least a line item and you need to go figure out those dollars. I was just recording a podcast, and one thing that most people forget is that dry utilities are so important to get power, gas, and telecom to a project. And not only not starting the design soon enough, but the costs to add more capacity to the existing infrastructure and to build transformers and to physically run the lines, as well as having with water and sewer and having the meter connection and tap fees. Those are all things that add up and can kill a deal if you don't check them earlier. So it's the full-blown due diligence from that aspect, and continuously doing the underwriting to make sure it works, and being willing to tweak your model to say, okay, this doesn't work as a duplex. Maybe we're going to build triplexes or switch this over to a cottage community. So just being willing to be flexible with the project as you go too.
Yeah. And having contingencies factored into the analysis too, because I've also seen a lot of people that, bring me a financial analysis and they're like, oh yeah, the numbers work. And then you start looking at some of their assumptions and you're like, whoa, like you are way off. Like, a lot of times you'll see these pro formas from brokers and they'll say, oh yeah, like if you buy in at a 6 cap and then you exit at a 4.5 cap, it's like, okay, well, sure. I mean, the likelihood of that happening, first off, you can't predict the future. And second off, like the probability of you being able to have that much of a delta in the end game is not feasible. So it's one of those things where, kind of questioning constantly your assumptions about the project, income, expenses, et cetera, and just being conservative. It helps. I don't necessarily hide mistakes, but it helps mitigate some of the mistakes that ultimately are going to come up in a project. So it's better to be a little bit more conservative than it is to be kind of just a maverick or cavalier, as they say.
Right. Like you want to underwrite for a more conservative scenario and then work like heck during the project to make the best case scenario come. But remembering that this is a multiple year process. So things are going to change, and some are in your control, some are out of your control. So if you value your sleep at night, you will not do the most aggressive pro forma and underwriting to make something work. And then also just understanding, are you taking outside capital as your limited partner to help you fund the deal? And realizing that even though it's not your dollars on the line, you need to treat it like your dollars. When we go into deals, a lot of the time we can bring the team. And so we'll actually bring in the sweat equity portion, and we'll have the limited partners who have the money but don't know how to do the process. But we treat that like our money, and we make it very clear, and we'll get all the partners together and say, okay, here's where we're at. We could do this here, but this is 75% chance it's not going to work. But if we tweak the model, yes, we're going to make less money on the back end. Now we're up to, this is 75% that this will go forward. So I think one thing I've seen too many people do is when they bring in money partners, not treat the money like it's their own. And
yeah, the incentive structure, especially in recent years. I mean, I've seen some limited partner opportunities that have just come in my email. I have friends who also are investing in limited partner opportunities. And when you start diving into the way that the deals are structured, I'm always shocked by, acquisition fees, and they have all these different fees tied to the actual investment. And so at the end of the day, the general partners have no capital in the deal, and they're obviously making money on the deal even before the deal starts because you've got the acquisition fee, you've got management fees, you've got all these other things. And so the incentive structure is kind of out of whack. And to your point, I've only ever raised money once, and most of it's friends and family. We're actually going to be getting them out of the investment with a little bit of a profit too, which is cool to see. But again, it's the same type of thing where I treat it like these are my friends and my family. I don't want anything bad to happen, because if anything were to happen that would be bad, it would literally, I wouldn't be able to sleep at night. So that's the type of stuff that the type of obligation or thought process you have to have when it comes to these sort of things, because at the end of the day, we're doing this for our long-term wealth and benefit, but you also want to do things right in business in general, because at the end of the day, it's going to benefit you in the long run. So, yeah, I mean, I couldn't agree more that, especially when you start raising money, you got to be very, very careful with how you do it. So.
And to that, I don't do syndications, but I will do JV deals where we'll do that. And yeah, just syndications from the standpoint of I don't want more people as my boss. There's a reason I started my company. There's a reason I'm a developer. But with the limited, like for our affordable housing projects, we were going into the LIHTC space, and unfortunately we had several start, but then many things shifted in the past year or two that we decided it was better to kill the deal than go forward. But through one of the masterminds I was in, we started working on a couple deals, and one of the people had a business in the Bay Area, tons of extra capital, really passionate about affordable housing. So he was the money person in the deal, and we had two other partners in that. But yeah, same way of here's exactly all the business decisions. Let's make this together. Let's be very cognizant of it, like our deal.
Yeah, 100%. So one of the more integral pieces of the process when it comes to development is working with contractors and subs. And I think, at least for me, I don't have a construction background. I have an engineering background, but the discipline of engineering that I was a part of, I was a mechanical engineer for a bit. Then I got into industrial engineering, which is more process engineering, and then ultimately got into software development. So, I think there's a piece of me that I think I have some technical acumen, but not necessarily when it comes to the nuts and bolts of constructing property. And so, someone who has very little to limited experience in that, I think I'm probably in the same boat when I ask this question is how do you vet people that you start working with on the contracting side if you yourself are not someone who has that day-to-day experience? And then how do you manage the different trades and disciplines throughout the project to ensure that you guys ultimately come to a successful conclusion? And, I know that's a very complicated or like in-depth question, but if we could just share some insights, that'd be
great. Yeah. I mean, again, relationships and partnering on deals comes down to your strategic partners as well. So your architects, your engineers, your contractors, and the A players want to play with A players. So when say you have an adaptive reuse project somewhere, if you have an architect or an engineer, an architect on the building that's going to help you with the TI plans, then getting them to say, hey, what contractors do you know or have you worked with in this area in the past that specialize in this type of project? And just asking a couple different people. Cities won't necessarily tell you because they're not allowed to promote one business over another, but they could tell you, hey, here's everyone who's pulled a permit recently. So getting those initial referrals, trying to get it from the people worst case, just Google Perplexity, whatever, and say, I would like a contractor who specializes in this exact product, because someone who does apartments is not the same person who can do mixed use, is not the same person who can do industrial. Can they build it? Are they technically qualified? Yes. Do they specialize in it? Are they going to have learning curves on your dime? That's where you want to say no. So finding the ones that specialize in exactly that. If your project's big enough and you can have a general contractor, then I would recommend always bidding it out to 3 to 5 contractors. Smaller markets, you're probably only going to get 3. Bigger ones, you can get 5. And typically you're going to throw out the high one, throw out the low one, see the 3 in the middle and get their full bids. I would highly recommend also not just taking lump sum numbers and saying it's going to take 6 months and $1.5 million. What are you making as assumptions there? And to back that up as you're figuring out which contractor to use, how the quality of the bid package that you give them to give you a number on is going to also determine your outcome. Many times people will go, hey, I would like to turn this into, and they give a verbal description and they get a generic number from the contractor and like, okay, that'll be 1.2 million. What the contractor is assuming for what they came up with that number is probably wildly different than what was in your head for that. So the more detailed you can be with the plan set, with the instructions, telling them the end tenants and users, that's the verifying what assumptions are being made on both sides is a very key fact. And so then if you have a general contractor on a project, they will be the one managing those subs, but you do still need to manage the contractor. A key thing outside of just the actual work, when you get to the pay apps and how you're going to be paying those contractors, Sometimes when you pay the contractor for a portion of work that's done, they aren't necessarily paying off those subs. So a good way to help yourself is to get lien waivers and lien releases each pay app or each draw that you pay the contractor. So that way, what those pieces of paper mean is that you've paid the contractor, they're acknowledging that, and the subcontractors are acknowledging that they've then been paid by the general contractor. Most of the time it's fine, but that's your CYA for the one time the plumber and the contractor get in a dispute, they don't get paid, they pull off a job, and then you're stuck with a lien on your property. So, and then if you were to have the trades come in direct, just understanding the nuances behind, okay, well, you can't put up drywall before you've done the rough utilities. So understanding the general timing of that. And how you do that is by getting a schedule from the contractor and having someone put it together and say, here's our project. It'll take 3 to 6 months. Here's how we're going to manage it, because they have to manage it somehow. So they'll have the schedule, and then on that, it'll have the weeks that each type of work that will be done. So you can literally take that schedule and you can be like, okay, today is July 25th. They said this, and this would be done. And you can kind of look around and go, well, they said this would be done, but that wall's still not demoed or opened up. So I don't think we're there yet. So you might not know 100% of what's done or not done, but you can kind of then start to ask questions from there.
That's awesome. So with that question, so you referenced a chart. Well, I'm assuming like a Gantt chart that kind of highlights, the phases of the project and how each sub is going to be operating within that scope. I guess, how do you typically orchestrate that? Is that typically I know usually it's the responsibility of the general contractor, but in the case where you yourself are looking to manage that process yourself, are there consultants out there that can help with creating that chart, or how does that typically work?
So there are construction managers that you can bring in on deals, but just like property managers or anything else, you still have to manage the manager. So what I would do is I would figure out what's going to be my lead trade in that project. Is it going to be that is electrical the most critical point in that? Or is my plumber, that's my go-to person. I have a relationship with them. While they're a plumber, they also could project manage. So maybe just evaluating which of the trades could maybe step up and be the lead trade on the project, managing everyone else and the schedules. We've got one of our contractors in Reno that we'll bring him in to do exactly that. But that's not necessarily what his forte is, but it's what we've got a relationship, and we know he's going to be the owner's rep on that project for us and help be our technical boots on the ground and that translator throughout the project. So, and even if you're hiring the trades direct, you could even potentially reach out to a contractor or a friend and see who knows construction and maybe have them do that as the owner's rep from the outside.
Yeah. So the terminology, I guess, is owner's rep. Is you try to assign a responsibility to one of the lead contractors, as you mentioned, or the subcontractors. And granted, I mean, you got to, I'm sure, have a pretty good relationship with the individual, and that may also lead to additional compensation for that person. But it allows you to kind of mitigate some of the potential risk, because if you yourself aren't well experienced in how the phases of these projects work, and you don't have a clear plan of who's going to be when, where, and when, then you could get into a situation where you do certain things out of order, or maybe someone's delayed to a point where it holds up the rest of other people, and maybe now the subs have to go and work on another job, and then they'll eventually make it back to you, and so it creates these longer delays in the way that the project's being completed. And so, as Christy alluded to, time and time again, time is money. So if you take a 6-month project and now it's stretched out to 12 months, well, I mean, obviously the dollar figure of what you pay the contractors is obviously shifted potentially. Interest payments on a construction loan has definitely come into play as well. And then also the fact that you're losing income from the opportunity cost of not having that project done in a timely manner is also something to consider. So, there's a lot of things that could go wrong.
Yeah, I know a lot of people they would like to check their brain and say, okay, cool. Even if you hire a full contractor and say, great, in 6 months, I'll be back. Construction is very hands-on, and when it is your project and it's your construction, even if you don't necessarily know all the nuances, sometimes just showing up randomly once a week is a good, oh, well, I know this developer, I don't know what day, but they're going to be showing up and doing spot checks once, maybe twice a week, depending on the size of the project. That helps kind of keep everyone accountable, and knowing that over communication is a must, because the more you can communicate between all the subs, you'll be able to mitigate risk. One thing I like to have early conversations with and hold pre-construction meetings with all the trades. So say you have, the electrician, the plumber, the drywall guys, the flooring guys, you bring in the different groups and say, here's everyone. Here's all the people who are part of this construction project. This is our goal. This is our schedule. Schedule's posted on a wall, wherever, especially for construction crews, the more physical stuff you can have, the better. We're all on the same team. Potentially set in bonuses that help make everyone stay in alignment and communicate themselves to say, hey, if together we all hit this, then, maybe there's some early completion bonuses or incentives or something that keep the crews motivated and wanting to talk together. And then just making them all feel like a team. In the end, we're all people. We all we don't want to let someone down, but the more that there's a gap in communication, the more that there's a more individual component to it, then it kind of allows one person to drop the ball and then the next person drops the ball. We just had on our pod, but Rajan was basically saying, hey, leverage social media to put it out there. I mean, there's some level of, sometimes people, they go, look at my awesome painter in here today, and taking the video, and they have that pride of ownership of what they're working on. So use anything you think possible that can help incentivize them when they're 6 hours in and sweaty and hot and tired, and they just want to take a shortcut, and help them feel that sense of ownership and pride.
Yeah. And that's a great point too. I mean, if you can show them, hey, you're on social, you got a pretty big following, and you say, hey, I got this person on site, and today they're operating and doing this particular section of the project, and they're doing a great job. I mean, that in and of itself is a great business opportunity for them, because it allows them to now open themselves up to a wide range of potential people that they could potentially work with in the future. And obviously now you're recording their work. So it creates a double incentive, as they say. That's awesome. All right. So what I was going to do is I was going to ask one more question, and then I wanted to give people in the audience a chance to open up to Q&A as well, because I'm sure there's going to be people in the audience that have questions, particularly about real estate development. And I know Christy, will be happy to answer any questions you have. So with people who are listening, and they are someone who wants to get into real estate development, what piece of advice would you give them that's kind of a universal, well, not necessarily a universal piece of advice, but what advice would you give to someone who is an aspiring developer, and they, need some inspiration to be able to take on their first project?
Finding someone local in your community who is already doing it. Maybe it's a developer, and just you drive past a job site and you see the different business signs that are on there, developers, architects, engineers, and just talking to people, letting them know that, hey, I am really curious. I want to get into development. I'm not sure exactly what kind, and just letting people know is a huge way. Part of the reason we have the Local Real Estate Developer podcast is because there isn't a ton of education out there for people to get in on smaller deals in smaller communities. And we're used to one or two people being the owners of most of the buildings in the community. And the reality is, we have over 16,000 cities in the US that have populations of less than 10,000 people. So if you can flip a house in that community, you can flip that small commercial building and have a couple retail tenants on the bottom, maybe some housing above or some office space. So it's not as unattainable as we think. And just getting out there and talking to people. We're recording some episodes with someone who's going through a project live in Idaho, and he just got back from his site tour and talking to all the different people, and he's so fired up because he's like, this is actually going to happen. And the deal happened by someone he was talking to at the cafe, grabbing a sandwich, saying, hey, I know this deal might not happen, but there was one that just fell apart across town if you want to talk to him. And so and then his equity partner for the deal came in because he was out at his weekly having drinks with the guys, and someone at the table next door overheard him. And they're like, hey, I'm going to give you a call tomorrow. What's your number? Because I have people who would want to invest in deals like yours. So literally a cafe we have in a sandwich shop, and then having drinks with the guys, and he has a deal and capital. And it does seem like it's all working forward. So it's not as unattainable as you think. You just start speaking your world into existence.
Yeah. And just being in the right places, I mean, I think one of the unique advantages that this is why I'm a very big advocate for the brokerage space in particular. And obviously it doesn't necessarily have to be this way, but for me, I always advise people to consider getting into brokerage, at least for a little bit, is because you get to see how all these different buildings are trading. You get an understanding of what lease rates are for different product types. And as you start to narrow down your focus, you start building relationships with potential tenants. You start building relationships with contractors. You start building relationships with all different pieces of the puzzle. And then ultimately, when a good opportunity presents itself, it's a good opportunity because you've literally seen all these different opportunities in the past, and you say, okay, well, now I think it's time for me to kind of jump in and take on this challenge or this opportunity. I mean, with one of the deals that we're actively working, that'll likely be our first development project, I sold the building 2 doors down, and I knew that it sold for this price, and we got it under contract for a ridiculous price, and I was like, oh. Like, this is great.
And you knew you had the confidence because you're like, wait, I literally just sold this.
I sold the building last year. I said, oh, okay, so that one sold for this price. And then I know the building across the street sold for that price. And this building that we're looking at is about the same type of building. So, hit or miss, move 50,000 to 100,000 on either way, and you're still in the green. So it's like, okay, so it gave me a little bit more confidence to say, okay, it's a worthwhile pursuit.
Mm-hmm.
But that's because of the fact that I've operated in the commercial brokerage space for a while. And, ultimately I built good relationships with different partners that I ultimately team up on these different buildings with. And we've built up, good reputation and people that ultimately want to invest in these opportunities. And that's just through us being active in the space. So, for anyone who's looking to get in development, I think part of it is just putting yourselves in those rooms, attending these networking events, getting in touch with people who are local. One of the things that I did recently was, when you submit permits to the city, oftentimes there'll be, some of it's public record, right? You'll be able to showcase, especially if it's an exterior modification. So you can go to these public facing websites. In our case, it's called Acela, and you could see, oh, well, this Hyundai is adding an addition to this building, and oh, here's the contractor, or oh, there's a permit that's been filed in this residential district, and there's a vacant lot, and the permits are in place to be able to build this structure on site if it's a residential property. And oh, by the way, here's the person who signed the documents. So, oh, look them up on Facebook and then reach out to them. It's pretty. You have to do a little bit of legwork, but I mean, hey, if you want to get in development, you got to show initiative. So.
Yeah, 100%. And it is on public record, and depending on the city, it's online, or some you have to formally request and they'll send it to you. But yeah, that's an excellent way of doing it. Or just even go in your town and go sit at the planning commission meeting.
Yeah.
And just see who's there, what projects are being talked about, kind of hear the demeanor and the back and forth and the candor of everyone talking, and just all sorts of ways. But just I'm a huge advocate of just getting very involved in your local community. You're choosing to live there. You're choosing to work in the area. You chose that area for a reason, and just getting more involved in talking to the people who are doing things.
Mm-hmm. Oh yeah, 100%. And there's opportunities for you to do that don't cost any money. Like to your point, going to the planning commission meeting, it's definitely a unique opportunity. All right. So if you guys are watching this, please type away in the chat box. We'd really like to answer any questions you all have about real estate development as a whole. Christy has a lot of experience in a variety of different property types, and I'm sure that she'd be happy to answer any questions that you all have. So in the meantime, while we wait for questions to come in, Christy, is there any question that you wish that I would have asked you that maybe I didn't? Or maybe a point that you wanted to make that I maybe missed as far as opportunity to ask you the question?
I think we really did cover a lot. And just what I'm very passionate about now is that our locals are the ones who are going to be able to take our communities and really create that connection and that sense of community pride again. And we've got several people who are working through the program and the mentorship and are doing their own deals. And the most exciting part is watching the community rally around them when they open for business, and to show their support and to be talking proudly of it. And to then, the best part is when other locals go, wait, you did that? We're going to do this over here. And then one project turns into 4 or 5 other projects spinning off, with locals leading the charge who weren't doing it before. So instead of the 1 or 2 guys who own the community, now you've got 10, 20 people who are doing their own projects, and really, really bringing the communities back to life and energizing them, and creating even more of that camaraderie with everyone who lives there.
Yeah, that's awesome. All right. Like I said, if you guys are watching this on all different media platforms, feel free to type away in the chat box. If you guys have any questions in particular, we'll give it about a minute to answer any questions. And also, which we didn't mention, what we did briefly mention during the discussion, Christy and I have teamed up and we started a podcast called the Local Real Estate Developer Podcast. Obviously, Christy's taken the charge on the actual brand of the local real estate development, organization. And I'm honored that she asked me to come on as a co-host, and she's done a really phenomenal job of creating a community of people who are aspiring to continue to grow in their community by taking on these different real estate development projects. And we've had a chance to interview people from all across the country who are doing projects that are really cool. I know we've interviewed people doing all different types of projects, and that's really, really fun. And at some point in the future, we plan to try to create these meetup opportunities for people who listen to the podcast, and also the guests of the podcast, so we can share ideas and continually find ways to improve our community. So just wanted to share that. I thought it'd be, people can tune into that as well. We'll make sure to include that in the show notes.
That has been so fun, just meeting more like-minded people who are doing projects in their communities around, because I'm used to working in the major cities and on larger projects. And it's just so inspiring to hear everyone's story of, oh, here's what I've been doing in my community, and being able to make it relatable and make it to where, oh, if that's how they're solving the missing middle housing in their community, maybe we can tweak that and take that model over here and solve it. So really just trying to create that platform where everyone can share their ideas and about development and what they're doing and lessons learned, to really inspire others to get in the game too.
Yeah. No, I agree. I mean, it's awesome. And truly the guests that we've had on have been all super impressive, and I'm really excited to continue on and hear the stories of the future guests that we're going to be having on the podcast. I'm just excited that you invited me on to do it with you. So thanks again, Christy.
Yeah. I'm glad we decided to do it. It's been awesome.
Yeah. All right. Well, it looks like we may have Yeah, it looks like we may have answered all the questions. So I guess first off, thanks so much, Christy, for stopping by. Can you hear me?
Yeah.
Just want to make sure. First off, thank you so much for stopping by. I really appreciate your willingness to share your insights with this audience about all the things that are pertaining to commercial real estate development. So thanks again for that. If you want to learn more about you and get into touch with you, what's the best way to do that?
I think I'm active on LinkedIn, and also if they go to localrealestatedeveloper.com, they can learn more about the podcast, about the programs. And yeah, we're just trying to put as much information out there as we can for local real estate development. So
that's awesome. Well, we'll make sure to include that in the show notes. So we're going to include Christy's contact information in the show notes, and any other pertinent information that could be of value to you all as well. So Christy, again, thank you so much for stopping by. It really means the world to be able to have you on the show. If you guys like this channel, please like and subscribe. It makes a big impact to our ability to reach a broader audience. Along with that, if you guys are watching this on YouTube, please like and subscribe. We've reached over 4,600 subscribers, I believe, and we're trying to continue to grow the channel so we can reach as many people as possible. So thanks again so much for tuning in, and we'll see you all next time.